What are options? A simple beginner explanation. Today we're answering one question only. What are options? This is not a strategy video and it's not a how to trade video yet. If you understand this properly, everything that comes later will make a lot more sense. Where do options belong? When we talk about options, we're still talking about the stock market. The underlying thing being traded is a stock or an ETF or a commodity, something real that already moves every day. An option is not the stock or the commodity or the ETF itself. It's a contract that is linked to the stock or the ETF or the commodity. So if an ETF like SPY moves up or down, the option tied to it reacts to that movement. That's why options don't exist on their own. They depend entirely on the stock or the ETF or the commodity. What it's doing, is it moving up or is it moving down? This connection is what makes options powerful, but also why understanding the underlying market matters. So we're still in the stock market. We don't trade the stock itself, we trade a contract linked to this market. What an option actually is. So now that we understand options, are connected to real stocks and ETFs or commodity, here's the distinction. When you trade options, you're not buying the actual stock or ETF or commodity. You're buying a contract, or rather getting into a contract that is linked to it. That contract responds to how the underlying price moves up or down or sideways. So you get into a contract that is linked to the ETF or stock or commodity. So you're trading price behavior, not ownership of the stock or the commodity. This is why options can move faster than stocks and why timing really matters. We talk about calls versus puts. I want to pause here because this matters. When most people first hear about options, like me, they immediately see things like covered calls, iron condos, spreads, complicated names. And that definitely made me feel overwhelming because I was looking into this options trading and then I was learning all of these strategies, iron condos, covered calls, spreads. And I was like, but I just want to be able to trade it. But at its core, options can be simple. So you can trade it like Forex, where you're trading the direction. You buy when you believe the price will go up, the price of the stock that is, or ETF, or you you buy when you believe the price will go down. So you buy in either direction, right? So we're keeping it simple here. If you're looking for information about covered calls and all of those other spreads, look at other creators. So the simplicity that we're doing here is directional. We buy a call when we believe or we've calculated that the price of the stock or the ETF is going to go up. Or we buy a put contract when we believe that the price of the stock, the ETF, or the commodity is going to go down. So we speak about directional trading. This is something I wish someone told me earlier. You don't have to start with complex option strategies. You can trade options directionally the same way you trade Forex or indices, like I said before. You're not starting with covered calls or iron strategies. You're simply trading price going up or price going down. This alone removes a lot of confusion I had when I started the trading journey. So they can be traded directionally, like Forex, like indices, like Bitcoin. So basic terminology. Every option has three basics. The strike price is the price you are positioning around. You say, based on my analysis, price is more likely to be above or below this level within a certain time. The expiration is how long that contract that you're getting into lasts. Remember, we said an option is a contract linked to a stock. So the expiration date, you can have a daily, you can have a monthly, you can have a weekly contract. And then the premium is what you're paying for that contract, right? So here's an example. Here we have stock XYZ, right? That's the stock symbol. It can be SPY, it can be gold if we're talking commodities. It can be Apple if we're talking stock. SPY if we're talking ETFs. So it's got an expiration date. When does this contract expire? I'm getting into a contract today. Does it expire in a day? Does it expire in a week? Does it expire in a month? The strike price. The strike price, like I said before, this is what we have calculated it's going to get to, the stock price or the ETF price. We're saying that it's going to go to 70 and above. What type of contract is it? We bought a call, we purchased a call. So we believe that the stock or ETF or commodity is going up. So we bought a call with a strike price of 70, believing or having calculated that it's going to reach 70 and above. How much did we pay for it? We paid a premium of $3.10. That's how we read it. We will get into it later, but at the basic level, this is the terminology: the strike price, when does it expire, and the premium. When buying a stock, you own a piece of the company. When you buy an option, you own a contract tied to the price movement. Stocks don't expire. When you buy a stock on Apple, you can hold it for years and keep collecting the dividends, right? And then options expire because what did you do? You bought a contract and it was linked. It was a day contract, it was a weekly contract, it was a month contract because you said that by this date, you believe that the strike price is going to be X, right? This is why options move faster and feel more intense. So I just wanted to clarify the difference between stocks versus options. Why people trade options? One reason people trade options is because it's flexible. You can express a directional idea up or down without owning the stock. And you can do it intraday. The great thing is that you can do it intraday. You can trade in the morning and close the contract off or sell the contract off at the end of the day. There was a movement in the stock or the ETF, and you were able to trade that movement, right? Okay. Yes, options can get complex, like covered calls and iron condos and all of those things I don't understand and I'm not interested in understanding. I just want to trade directionally so that complexity is not part of how I trade. What options are not? Options are not complicated by default. They only become complicated when people jump ahead. You don't start learning to drive by racing a Formula One. First, you learn direction. This becomes important. Is the stock, the ETF, or the commodity moving up or down? Am I going to purchase a call a call contract or a put contract? So you need to know how to get into the direction. And the right timing is important. And of course, discipline, because you're going to see later, you're going to have to develop a trading plan or a trading strategy that's going to work for you, right? So they don't have to be complicated and you don't have to use all strategies and you must not rush things. The strategies come later when your foundation is solid. So now that you understand what options are and how calls and puts work at a basic level, the next step is understanding where these trades actually happen. In the next video, we'll talk about brokers, what they do, and how trades are placed. So what is a broker and how trades are placed? I'll see you in the next video. Take it easy.